This is the new weekly outlook for this week. We're going to go over US30, GJ, UJ, and gold. We're going to mix the fundamentals and the technical side so then you have a better understanding of how the fundamentals are translating onto the technical side and how to look for the trading opportunities coming up this week. So starting off with US30 this week, we're starting off with US-China trade talks, which started today in London, and they're going to continue on to tomorrow. And the news that we have so far for today's talks is that there's been a lot of positive news and progression regarding the US-China trade talks. Trump has granted some flexibility on export controls to US Treasury Secretary, and the US has signaled a willingness to remove restrictions on some tech exports in exchange for assurances that China is easing limits on rare earth shipments, which are critical for energy, defense, and tech products. The reason why we care about this as traders and why it's important is because China accounts for almost 70% of the world's production of rare earths. Then later on in this week, we have CPI, PPI, consumer sentiment, and inflation expectations coming out. And that's also important because that leads into the rate cut decisions that we're going to get next week from the Fed, Bank of Japan, and Bank of England as well. Any central bank has two main mandates, which is price stability, inflation, and then maximum employment, which of course is labor market data that we got last week. So with CPI this week, if the numbers come out as expected, core CPI month over month, we're expecting an increase from 0.2% to 0.3%. Year over year, we're expecting an increase from 2.3% to 2.5%. So if the numbers do come out as expected, then the Fed will not have room to cut rates as demanded by Trump. Investors are already eyeing less than 2 rate cuts this year after NFP data reinforced Fed's wait and see approach. The consumer inflation expectations have dropped to 3.2% from 3.6%, which is the most significant decline in projections for 1 year ahead price growth. Inflation expectations for 3 years ahead has dropped to 3% from 3.2% and down to 2.6% for the 5 years ahead. For the labor market, several Fed officials are expecting higher unemployment this year due to Trump's shifts on trade and immigration policy. Consumers are more optimistic, though, about the labor market as well as their personal finances. And then we also have the geopolitical tensions, which are impacting the demand for equities and safe haven assets and commodities. And these tensions, they remain high as Russia claimed control of territory in Ukraine's east central region, and tensions continue to rise in the Middle East as well. So if these escalations continue, they can push the demand for safe haven commodity like gold, currencies like yen, and even push down the equities like US30 in the short term. So with that being said, on the technical side, on the weekly time frame, we see that price has been consolidating out for almost 3 weeks or so at the moment. So right around here. This week, we're trying to push above it, try to see where we're going to be headed. So we're going to mark off that resistance for the current week, which is right around here. Zoom in a bit. And I'm going to mark off the previous week's top wick rejection, since that's the highest that price went recently, which is that 42,925 area. And then when we look to the left, we see that there was a fake out, price pushed back down, and then finally we got some volume to the upside. Even after breaking above that area, price did have to come back and respect it as support prior to a continuation up. And that's kind of the all-time high that price was sitting at. That's where we got the candle closures. After that, we had some wick rejections, but we really didn't get candle closures around this area again. Instead, we came back down for a deeper corrective move in early 2025 and then pushed right back up. And that's kind of the area that we're sitting at the moment. When we drop down to the daily time frame, we start to see a bit more of consolidation formation here, even in the past and leading up to the current price action as well. So here I'm going to mark off the support, which is the previous daily support right here. That is where last week we tried to push back up above this area, closed out, and then on Friday we had that massive bullish momentum to the upside, which was also supported from the NFP data that we had. So that's your 42 to 88 area. That's the range that we're looking at this week. And then in this range, quite similar to the current price action, in the past, we also had a ton of consolidation. So there's a very high chance that we're probably just looking for a zone to zone trade. If price continues to reject that 42,925, we're looking for a continued sell opportunity to come back into that 42 to 88 and then look for a bounce up like it has in the past and then a continuation. That can happen from any of the progression with the US-China trade talks tomorrow, CPI data, PPI, and even the inflation expectations that are supposed to come out on Friday. So depending on those fundamental releases, we can push either above that resistance if it is positive news, positive economic data release, or we can see a stronger sell-off depending on if we don't make a lot of progress with the US-China trade talks, or if inflation does come out even higher than we were expecting, and same thing with the inflation expectations on Friday. Drop to the 4-hour time frame, we're starting to see a bit more of that consolidation more clearly, so I'm going to mark off this entire area. That's my no trade area, so as price comes close to this, I'm not really looking to enter any sort of trades. I'm also going to narrow in my zone. So if price breaks below this 42,640, that's the only way I'm going to entertain any sort of sells here on US30 to drop back down into 42,288 and then look for continued either a bounce and then a continuation to the upside, or if price continues breaking past this, again, depending on the data that we're going to get this week, we can look for next target coming down into 41,900 area or so. But the first area of target for any sells is going to be 42,288. For any buys, I would want price to reverse and break above 42,925, and then a continuation up, potentially coming back into some of these previous resistance and support areas. So the first area of target here is going to be that 43,345 or 346 area for any buying opportunities. Anything in between, I'm not really looking for a trade here, so I'm just going to wait for one of these levels here to be broken on US30. Coming on to GJ, and then the quick fundamentals here for this week is going to be from the UK, the employment data that comes out on Tuesday, GDP month over month that comes out on Wednesday, and then inflation expectations from consumers on Friday. For the Japanese yen side, it's going to be PPI on Tuesday. So same thing here with Japan's prime minister. He said today on Monday that the economy is shifting to a phase where interest rates rise as a trend, and noted that rising rates could push up the government's debt financing cost and affect its spending plan, resulting in higher borrowing rates and increased cost of funds. If that happens, then that's going to influence traders to place bets supporting the Bank of Japan to raise rates again this year. The chances are next week they're probably going to maintain out and remain steady with the interest rates as they did in the last meeting. But then if we see that the rates are increasing again and the spending plan is being impacted in Japan, then we can expect to see potentially 2 more rate increases going into the end of the year. For the UK side, the investors are waiting for the employment data for 3 months ending in April, which is coming out on Tuesday. And that report is expected to show that the unemployment rate increased to 4.6% from the prior 4.5%. And the UK's labour market will influence the market expectations for the Bank of England's monetary policy outlook. But again, for next week, Bank of England is almost certain to leave the rate steady at 4.25%. But this employment rate data could also influence the future rate cuts that might happen going into the end of the year. So coming on to the technical side here and translating those fundamentals, we have pretty strong fundamentals and pretty strong releases so far from both the UK and Japan. And on the technical side, we do see that price has approached a very strong weekly resistance, and that's kind of the area that we're hanging out at the moment. So I'm going to do 196.1. That's the area that we're rejecting. And anytime price has approached this area, and you can go back and take a look at this as a back testing exercise as well, there's always very strong fundamentals that have to come out in order to either push past this area or for you to see a reversal to come back down and look for some corrective moves, which has happened since March 2025. So the last few months, you can check the fundamentals here. Anytime price approaches this level of resistance, there's always fundamentals that are supporting the move in either direction. On the weekly time frame, I'm also going to mark off the previous weekly candle's bottom wick rejection, and that's going to be the range that we're looking at in the short term. Come on to the daily time frame. So here we're seeing a ton of consolidation in the past, and then price kind of struggling to break past any of these areas without fundamental support. So same thing here, you had some good fundamentals which helped push price past that 196-100 area. Other than that, we're just kind of consolidating here. We came back, kind of tapped into that area before a corrective move, and then a continuation down from there. Same thing here. We had some nice break and retest setups, rejections right into this area. And that's where price was consolidating most recently as well before push back up last week. And then the last daily candle closed out right at the top of that range with a weak bearish candle. So again, we didn't even break the previous daily high here. So there's still a lot of uncertainty, not really clear direction on where we headed. So similar to US30, I'm going to mark off this area as my no trade range. If price can continue breaking its own daily low and then continuation down, then I would be targeting 195 as my first area of TP and then a continuation down there. That's just going to be a zone to zone trading that we're looking at again for this pair. Coming onto the 4-hour time frame, so a couple of last 4-hour candles approach this area. You have sort of a break and retest setup right here, but we didn't have enough momentum to break past that 196 100 area. Instead, we came back down, a bit of a corrective move, and then last couple of 4-hour candles started to lose out on that bullish volume. The current 4-hour candle just started forming, but again, you don't have enough volume to either break the previous highs or the lows. So for any safe bets, what I want to see is this 4-hour low here being broken at 195 400, and then a continuation down to 195, and then further down if we do see some weaker fundamentals coming out from the UK or stronger fundamentals coming out from Japan, which helps gain the yen more strength. Coming on to USD JPY, so we've already covered the fundamentals for US and then also for the yen. It's the same thing. So the fundamentals from US30, same thing applies here for USD. And then JPY is the PPI data that's coming out on Tuesday. But this one is actually more interesting because on Friday, the Japanese officials announced that they made some progress with the US in the 5th round of trade talks between the two countries. So with the focus remaining on trade negotiations and the broader risk sentiment, UJ is still expected to be sensitive and react to any developments related to international trade. But with more positive news surrounding US-China trade talks between today and tomorrow, investors can have a more risk-off sentiment, which would favor the equities and the US dollar more. And so looking at the higher timeframes, we are seeing that this pair is also sitting in this consolidation, which means that there's going to be a ton of volume whenever price does break past these levels here. That's going to be 142 100. And then your resistance is going to be right here at 145. So as investors, we're really watching out for the economic data release this week, but also the US-China trade talks progression that's going to happen tomorrow to see which direction we're headed and if we have enough momentum to keep pushing past these resistance or support levels. Coming onto the daily time frame, same thing, a ton of consolidation into this overall zone. Even in the past as well, so if you look to the left, same thing around here, price really struggled to break out of this overall range. And then we came back, revisited, pretty much did the same thing. And then right here as well, most recently, kind of hung around that area for about 4 days in a row. The last daily candle is the one that gave us a good push to the upside. The new daily candle already gave us a bottom wick rejection right into this consolidation. And then pushing back up here again, but not enough bullish momentum to again find direction just yet. Coming on to the 4-hour time frame, what I want to see is that either 145 area to be broken for any sort of buying opportunities, or if we're looking for a range to range sell or zone to zone sell, then you want that 144 150 to be broken, and then you have your sell opportunities to come back down and revisit into that 143 to 142 500 mark here. If you drop down to the 1-hour time frame, as price approached 145, you start to see how the volume dies down a little bit, a bit of a choppy price action, and then a sell-off that comes back down. To respect that 144, 150, we push back up, but again, you don't have enough bullish momentum to come back and revisit into 145 just yet. So in either direction, unless you're looking for a quick scalp, I wouldn't really look for a trade in between here. If you are looking for a quick scalp, then you wait for 144, 675 to be broken. So then you can take that clean trade up to 145 flat. But if you're looking for better trading opportunities, most likely in New York session, you would want one of these levels here to be broken. So then you have your clean trades and you're really not stuck in any sort of fake out. I'm expecting gold to be a little bit more volatile this week and even next week. So the key fundamentals for this week are the same from US30, the US-China trade talks, CPI, PPI, consumer sentiment, and inflation expectations. And of course, keep your eye on the geopolitical tensions that are happening in Russia and also the Middle East. But the focus overall for all of these pairs remains on next week for the central bank interest rate release. Bank of Japan on Monday, the Fed on Wednesday, and the Bank of England on Thursday. Looking at this on the weekly time frame, we're sitting at all-time highs, but here, massive consolidation here, very clear, right into this area. Since early 2025, really haven't been able to break past, the last high at 3,500. So we're going to mark off the resistance here, which is the last high of the candle closure at 3361.8 flat. And we are going to adjust that as we drop down to lower time frames because that was the last bullish candle closure that we really got. Other than that, it's just been wick rejections. So last weekly candle, massive top wick rejection, try to break above that 3361.8, couldn't really do that, came back and closed below it. This week we have a bit of a bottom wick rejection right here, and then the candle flipping back up bullish. So I want to see how price reacts in this lower range. If price breaks below this 3294.5 area and pushes back down, then we're looking for sales to come back into this 3200 mark flat. If it doesn't, then we're looking for those buying opportunities, even quick scalps coming into 3361.8, and then even target that 3400 flat. Come on to the daily time frame and you start to see that consolidation with this range even more clearly. So that's why this is a zone to zone trade that we're looking at. So within this, I'm going to mark off the current daily candles opening right there, which is also that resistance for all this consolidation and that support right there too. So I know that when this candle flips above this area of 3318.8, I'm looking for buys to push back up into this area, and I want that bullish volume to break its own daily high and then push back up. If this candle flips, then I'm looking for clear sell. So that's going to be my indication here for the current daily candle. When I come onto the 4-hour time frame, we hung around this 3380, almost 3361 area. For the most part, you had a bit of a consolidation here on the 4-hour time frame. Then you had a nice sell-off after price broke below the support. Straight sell coming into 3294.5. And then a reversal or a corrective move of that massive seller's pressure, a corrective move into 3340. And then the current 4-hour candle just started off with great bearish volume, no top wick whatsoever. So once again here, if we're looking for sells, it's going to be below that 3318.8. If we're looking for buys, we want this area to be respected as support and then a continuation up into 3361.8. So we have a ton of fundamentals that are going to come out this week. It's a matter of just being a bit more patient. A lot of these pairs, as we saw in the weekly time frame coming down to the daily 4-hour, are sitting at either all-time highs or all-time lows, mostly all-time high levels and higher time frame resistance and support. They're consolidating. So when the market is consolidating and once it breaks past those resistance or support levels, there tends to be a lot of volume. So it's a time to really look for your zone to zone trades, look for your scalps, your day trades, and really not over trade or over risk here. It's very easy to do that in the current market conditions. Other than that, I hope you guys have a great rest of the week. And as always, if you have any questions, feel free to always reach out. Either comment below or on Instagram at SharmaFX.